focus on IT, given the kind of move that we've seen post-earnings on Infi in particular, and how it's now looking vis-a-vis at TCS. We've got Apurva Prasad joining us as well today in the studio. Apurva, good morning.
Morning.
So, if we take a look at it, after the outperformance post Q1, the gain YTD on an Infi stands at about 19%, TCS 13.5%. What would be, your preferred pick, and what's the kind of return potential you see in both these heavyweights?
Sure. So I think post the strong move by Infosys, I think the valuation discount is further narrowed between the two. So if I have to position myself between the two, I would still prefer TCS. It's in fact less than the mean valuation gap that Infosys has reached versus TCS. And one of the prime concerns, I think, in case of Infosys, I think that sort of continues. So the margin grind that we've been seeing in case of Infosys has been very, very significant. So the gap between the two was about 120 basis points a year back, which is now over 350 basis points. So while it's likely that the margin band may not get lowered further, but I see a downside risk to margins even now.
Glad we have you with us because, the Mindtree AGM is currently underway, and we're getting a few sound bites, or rather flashes from there. The L&T CEO, this is, at the Mindtree AGM, saying that they will forge ties with L&T clients for Mindtree whenever possible, and that Mindtree will be kept distinct from L&T Infotech and L&T Technologies. How are you reading to all of these comments on the back of the fact that we've seen those senior level executives resign? There are a lot of questions as well on shareholders' minds. What's the story here?
Yeah, so I think on the business side of it, we see some risk of slowdown for Mindtree. So in case of Mindtree, it was very top account centric. If you see, the growth in the top account has been almost 36% CAGR over the last 3 years. Ex of top account, the business has just been growing about 8 to 9%. So we sense that maybe the large account momentum may slow down. So we're looking at growth rates decelerating at least in the near future. So that's the business risk that we're looking at. And the very obvious fallout of that is attrition, at a senior level, and we're seeing some of that happen. So I think we're getting into territory where the next couple of quarters business momentum will slow down. I think that's the bigger risk for the organization as they undergo this transition.
Okay, going back to Infi and TCS for a moment. Now, except for margins, they're estimated to deliver similar double-digit growth at the top end of this year, and capital allocation policy now is almost at par. So will a 15% valuation differential then between the two remain, or do you actually see that narrowing?
I think it will still remain. Let's not forget that, this 8.5 to 10% includes about a 1.5% inorganic. There is also a large component coming in from the Verizon deal. And if you look at TCS growth, practically all of it has been organic. So I think the margin differential will probably continue. And I think the valuation gap can only narrow if that margin differential comes down. Let's just look at some of the basic metric for these companies. If you look at how the large accounts have played out over the past 2 years, the 100 million addition. So while it was strong for Infosys this quarter, but if you look more over a 2-year trend, I think TCS seems to have outperformed. The other important metric, especially in an environment where there is a lot of major tech crunch happening globally, you look at the attrition differential between the two. Infosys being twice as much as TCS. So I think that these would be some of the aspects which would need to change before valuation differential, I think, would come down further. So I think we should expect a similar discount that Infosys would probably maintain over a period of time.
And do you see any change in decisions on buybacks? As TCS has said, they're going to sort of think it through. Infi is going to complete it. Some of the other majors may be impacted. Yeah, so the arbitrage between buyback and dividend obviously now gone, but I think Infosys has talked about a 5-year period and a cumulative 85% to free cash. So it may not track an annual basis, but certainly effectively the payouts have increased. So I think that is fine. But then let's not forget that TCS is paying out 100% of its free cash, as in the form of buyback or dividends. So I think on that count also, I would probably rate TCS to be higher. And even if I'm looking at some of the other basic metrics such as free cash conversion, I think TCS is scoring above Infosys. So I think that does give them an edge.
What stands out from mid-cap IT? Any top picks?
Yeah, so we do like an Emphasis and a Hexaware. I think these are some of the stocks which are probably at an attractive valuation right now, and we see good business momentum to continue. So be it emphasis in the direct business as well as the DXC part, and be it Hexaware, which has made a very recent acquisition, I think, which can turn out to be quite accretive for them over a period of time. So I think these are a couple of stocks that I would like to call out.
Wipro earnings, what are you anticipating? What are you waiting to hear? Is it going to be muted?
Yeah, so I mean, we're expecting flattish sort of Q1Q performance. We expect them to guide. So they are guided about -1 to +1% sequentially. Margin should come off by about 70-80 basis points. So I mean, the crib for Wipro has largely been about 20-25% of the business, which used to be oil and gas earlier. Now it's telecom, healthcare, and I think a part of that portfolio continues to underperform that. X of that, Wipro has traditionally done well. So yeah, I mean, we need to look at some more positive guidance from the management to really call turnaround for Wipro as such. So we've not really been too positive on that. But within the tier 1 IT pack, we do like TCS followed by HCL Tech. That's our pecking order in the large ones.
Lovely. Thanks so much for joining in, Apurva, and giving us a sense of what you've made of the IT earnings, what the expectation is, as well as the Mindtree AGM and top picks. On that note, then let's slip into a very quick break.